just wish that I could help you stay. Nowhere to reach you, nowhere to hold you down. If you need to leave, then darling, you can. Nowhere to keep you from pulling yourself away. I just wish that I could help you. Say my name, I wanna hear you call. Hold me close, I wanna feel your heart. I'm in a cold sweat and I want you back. Now you got me all in my head like that, like that. You love how you push me to the point of crazy, and I love when you're on your knees and begging for me. You got me good with all these mind games. There you go, you got my heart again. Say my name, I wanna hear you call. Hold me close, I wanna feel your heart. I'm in a cold sweat and I want you back. Now you got me all in my head like that, like that.
For more info, go to kushsessions.com.
You love how you push me to the point of crazy, and I love when you're on your knees and begging for me. You got me good with all these mind games. There you go, you got my heart again. Say my name, I wanna hear you call.
All right, guys, what is going on? What is good? What is good? Hopefully you guys excuse me. Hopefully you guys had a good weekend. I know I did. Spent some time with some friends of mine on Saturday. We had some crawfish, amongst other things. It was a great time. It was a good time, chat. I hope you guys had a good time as well. Who's here today? Who is here? We got 26 people. We got 3 likes. Oh my God. It's still the weekend for you guys, huh? It's still the weekend for you, apparently. Man, I slept in today. Man, oh man, did I sleep in today, chat. I'm kind of glad I did, because I'm looking at the Nasdaq and I'm like, what is this? What is this? Oh my heavens, dude. It looks horrible. But it's cool. It's not a big deal. Music slapping today. Thank you, Cameron. It's the... I'll share the link probably later if you can remind me. It's from Kush Sessions. It's number 18. So it's Liquid Love 18. Number 18. So yeah. Listen to music pretty much all day, every day. And I did go on a little bit of a rant this morning on my Instagram. So I don't want to redo that here, but you know, basically long story short, nobody was really there for me at a young age other than music. So that's why I think I have such a love for music, you know? It was always there when other people weren't. Artists were the only people that were authentic when nobody else was. So maybe I'm thinking that is the deep-rooted connection there. That's my guess. That's my guess. So what's good? Naruto, Kobe, Willow, Alex C, Dr. Com. What's good, man? You can get back into the chat if you get a membership, my friend. I forgot we had it open on Friday. But welcome.com or Dr.com. What's good? Lucas, Nikki, Vadu, G, Maximiliano, Bruce, Cameron, Trillionaire, Eberneth, Cameron 2020, Jeff. Man, Jeff and I had a really good conversation. What was that? Yesterday? Yeah, we had a really good conversation yesterday. We got something special planned for you guys. I think Thursday of next week, we got a special video coming to YouTube for you guys. So mark your calendar. Thursday, 1 p.m. Eastern. All right, we're gonna drop that video. It's gonna be very good. I promise. What's good, Zay? Zay, we gotta make another video as well. We gotta do a part 2 funded Zay, you know, 100K Zay part 2, you know, like from anyway. Zay, message me on Instagram and get with me. I'll message you back after the stream is over so we can schedule a time to do that. Trainer says John, me and relate so hard on music. Oh, nice. I bet you had a long fringe once upon a time. I don't even know what that is, Cameron. What's good, Akinola? Music was always my bet and only therapy. Yeah. Yeah, dude. It's the only thing that was there that was consistent. That didn't lie to you, stab you in the back, cheat on you, keep you in the matrix, complain. You know, music was just like, hey, you know, I'm here, whatever. You know, it's people like Chris Motionless, you know. I don't know if y'all know who that is, but anyway, what I want to do here is go over a couple things. Some people have asked a lot more about futures, right? Because everybody's trying to make that transition over into futures, like I haven't been telling you the last 2 or 3 years, you know. But hey, I won't bitch about it. I told you so, but I won't bitch about it. We'll go over some valuable information that you guys need to know. So I'm going to put this website into the chat. So please write this down. I think I put it in the 90-day PDF. I'm not sure. But anyway, it's cmegroup.com. Okay? cmegroup.com. All right, so let me walk you through this real quick. And we might have to clip this for a video as well, because I get the same questions over and over again. And I don't want to keep having the same questions over and over again. Okay, so let's do this first. And then we'll go back to the price action and see what's good. But I don't have a bias really for today, but we'll get there when we get there. Thank you for that, Lucas. I work pretty hard for you guys. I mean, I try to do my best around here. Oh, that's a quote, Alex. That's a bar. Music can help you remember or help you forget. Well, I'll never forget the shit I went through, but it's okay. It's all good, baby. Because I can guarantee you all those people are working jobs and being miserable and trying to do all this crazy shit. And I'm here teaching you guys, and I do got shorts on, but I don't have to have shorts on. I could be in my drawers if I wanted to. So it's just everything works out in the end, my friend. That's why I try not to worry about all this stuff so much, because, you know, I'm here, they're there, I do what I want. It's cool, you know. So I don't want to keep rubbing that in people's faces, you know, but fuck them, in other words. So anyway, let's record this real quick. So cmegroup.com. Okay. I don't even think you have to have an account or even log in, but this is going to provide you information that you're going to need to know about margin, maintenance margin, contract expiries, rollovers, and things of that nature. So if you come up here, I did this a minute ago. I totally forgot how I did it. This is just the main page, by the way, just straight cmegroup.com. This is the main page. So if you scroll down, and this is just the way that I did it. I come over here to equities, and then I click right here, E-mini S&P 500. Oh, let me turn my mouse on. Okay, so right up here, right under equities, it says E-mini S&P 500 futures. So I'm going to click that. And then that's going to take me, ooh, that's bright. That's going to take me to this screen, okay? Where I guess they got all this stuff. So this kind of tells you the contract highlights. So the contract unit, it's $50, you know, per point, basically, is what that means. These are going to be your trading hours. Okay, there's actually quite a bit going on in there, but you can take a look at it if you want. All right. Now, if you go, this is kind of the important part I wanted to show you. If you come up here, right, they have quotes, settlements, volume and open interest, time and sales, specs, margins, calendar. If you click on calendar, okay, this is an important screenshot. I'm going to take my camera off for 2 seconds because otherwise you're not going to be able to see it. Okay, but right here. So look at this. You have your contract month, and the product code is basically going to be your ticker. So that's the symbol basically that you're going to type into TradingView or whatever. If you have a futures broker, it's probably going to be this or similar. So like for me, for example, on TradingView, it's ESH 2024. I'm pretty sure. Right? Like if we go to ES, that symbol up here is ESH 2024. All right, you can see it over here as well. ESH 2024. Okay, so that's right here. So the settlement date is basically when that contract expires. All right, so the settlement for the March contract is going to be March 15th. You guys with me so far? Drop a 1 in the chat if you guys are with me so far. Okay, we're going over cmegroup.com, you know, when these contracts expire, what they're worth, margin requirements, you know, all that kind of good stuff. Okay. So I think the rule of thumb is the third Friday of the third month. Something like that. So if we pull up this calendar, okay, the first Friday of March was the 1st, the second Friday was the 8th, the third Friday is the 15th, which is Friday of this week. That's the third Friday. All right. So basically, Monday this week is pretty much when people start switching contracts. So basically, switching from the March 2024 contract over to the June 2024 contract. Now, how do you know when or if you should change over? Well, number one, for those of you that have a funded account, the company that funds your account will not let you trade anything except the front month. So which means it's basically going to either change it for you, or they're going to tell you that you can't trade this symbol and you're going to have to go to June if March is no longer the front contract. Now, how do you know if March is in front or if June is in front, right? Which contract are we supposed to be trading? So there might be a better way to do this. I'm sure there is, but the way that I've done it is I've always went to barchart.com and you go, can you guys see that? Yeah. When you come up here, you can select a commodity, and what I typically do is scroll down to the indices, and then I just click on S&P 500 E-mini, and that's what takes you to this screen right here. Okay. Now, what you're looking for is this right here: volume and open interest. We're not looking at cash. What we're looking at is ESH, the March contract, and then the next one, the June contract. So which one is higher in both volume and open interest? It might be hard for you to see because the numbers are really small. I'm on a 27-inch monitor, so I could see it. But basically right now, the volume is slightly lower on the March contract. The open interest is a lot larger. So I think for right now, we're on the March contract. But very soon, if not Tuesday or Wednesday probably, this is going to change where the June contract is going to have both more volume and open interest than the March contract. So now, so with the numbers like how it is right now, I think it's fine to trade the June contract. Like I think it's fine to switch today. Okay. We all good with that? So cmegroup.com, that's how you can look at the E-minis, the micros. Barchart.com, you know, that can tell you the volume and open interest a little bit. I'm sure you could probably get that on CME, but I don't navigate that website too much. So, but this is like the easiest, simplest way that I can think of to switch your contract from whatever month that you're in to the next one. Okay, so that's barchart.com. And this one is cmegroup.com, has all your expiries, all your start date, end date, things like that. Let me even check this out real quick too, see if we got the margins up here. Yeah, the maintenance margin, trading hours, blah, 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 blah. Okay, so there's that. All right, cool. Very, very simple, very, very easy. All right. Now, on the topic of futures, again, I don't really have a bias for today. I don't know. I have no idea. I think I would prefer lower pricing. However, if we look at SPY, look at it, we still have that 504 level down here that hasn't been met yet. We also have that 508 40s that we haven't met yet either. But the thing about today is when we gapped lower at the open, again for the ETF side, we ended up leaving some highs here. So right before lunch started, we had left some highs. So this gap, some highs. So we traded higher and into that for now. So to me, I don't know. I'm not entirely sure. But again, I still think I would prefer lower pricing for the indices. If you watch the stream on Friday, I told you about these levels here, and then I said if we were going to violently continue lower, it would probably run these lows down here, and it didn't really do that. So it hit the lows. I think that was on the session too. That was fun. And then it went higher. Okay, and then it sold off again into the close, and then today it traded down and into that. So if you were trading an options contract that was for Wednesday or like Tuesday, Wednesday of this week, that would have been probably pretty solid. But I don't usually hold over the weekend, and I'm glad I didn't hold that either, because this run would have stopped me out in profit, and then I would have, I don't know, I wouldn't have liked that. You know what I mean? So it's kind of like you're like wrong and right at the same time. Like you're right on the target, but I was wrong on when it was going to do that. So there's just a little bit more of my imperfection for you. You guys good with that? So that's the short and sweet of it. We talked about the website, cmegroup.com and barchart.com for volume and open interest, contract expiries, things of that nature. There's more of you on here now, but earlier I did mention Jeff and we did an interview yesterday. That's going to come out on Thursday of next week at our normal scheduled time. So you guys are definitely going to get some value out of that. And I think that was really the only announcements that I had. So if you guys have questions, drop them in the chat. Drop them in the chat. But yeah, dollar index. I know we talked about this last week, how Friday traded below January's low. We traded into that gap, and then we even extended further into a smaller gap from January. That was a January low, not January's low. Sorry, just for clarification. And then we hit this down candle here as well. If the dollar rallies, I mean, it's kind of up on the day so far, although we did leave some lows behind, which doesn't always give me great confidence that these lows won't be swept. So we may not be entirely bullish yet, but if we are, that would basically align with a potential lower indices, right? So if I was short still, like from either Friday, I didn't short on Friday morning, but if I would feel pretty okay about this, just because again, we have really clean lows here on SPY and then really clean lows down here as well. So I would feel okay if I was short from up here. But now if we trade back above, I guess whatever that level is, like if we trade above Friday's PM session high, I would wait for a signature of distribution before going short, which I usually do anyways, but that's that. Anything dope planned for you this week? Today, actually, I'm meeting an old friend for dinner. I haven't seen this person since I was like 15, maybe 16. So it's been like 14, 15 years. So that's kind of exciting, I guess. I mean, I'm an adult, bro. Fucking 30 years old. I don't really get like excited about things. You know, it's not like Christmas morning when you're 12, you know? So, but I mean, it's cool. Baby Pips is finally crawling, so I'll be playing Chase the Baby from here on out. Oh, man. Oh, man. Well, have fun with that. Have fun with that. How do you work on your patience? It's a great question, Lucas. It's a great question. So, one thing that Marcus Aurelius talks about, and honestly, I just thought about this too. Actually, it was during when Jeff was speaking. Actually, is when I thought of this. I never knew why in meditations, right? In all of you know meditations. If you don't know meditate, I don't know what you're doing here, but meditations by Marcus Aurelius, right? I never understood. I never looked this up or even asked. But I was always curious why there was a raven or a crow. I can't tell if it's a crow or a raven or what, but there's a bird on the cover of Meditations by Marcus Aurelius. I never understood that. And I might even be wrong in this assumption, but I know one thing he does, or one thing that he wrote down, was that whenever you have a problem or you're going through something, to look at it from a larger perspective. He's basically like, look, let me draw this out because this isn't going to make sense if I just show you with my hands. He's basically like, look, this is your life. You know, let's just say 75 years. He's like, this is your 75 years of life. And he's like, this is the universe. And he's like, your life is just but a blip in time. And he's basically saying that your problem, you pretty much are insignificant, right? But it's your problem is so insignificant as well. The thing that you're going through, like say you had 1 or 2 bad days in your life. He's like, that's just 1 or 2 days and you have this entire lifespan. So he's looking at things from a bird's eye view. That's why I think there's a raven on the front. Maybe I'm wrong. Maybe I'm overthinking it, but Jeff was talking kind of like similar to that and was saying how, well, you guys will watch the video next week, but when he said that, I'm like, wait a minute, that's why there's the raven there. So, but anyway, I say all that, Lucas, to tell you that you got to look at things from the broader perspective. You know, you got to look at things from a broader perspective. Think back to a couple weeks ago when it was 2 weeks ago on Wednesday when I told you that, or sorry, it was Friday 2 weeks ago that I told you I was in a car accident on that Wednesday. Okay. So on that Wednesday, you know, I pull into Kroger, lady hits me. She gets out of the car. I crawl my way out of the car and, you know, we're talking and she's crying because she's so upset and her husband had just died. I said, how long were you married? She said 62 years. Right? So you take a perspective like that, 62 years married. And here I was in high school mad about wasting, say, 6 months or 8 months of a relationship. Why would I be upset about losing 8 months when I have the potential to be married to somebody for 60 years, 50, 60 years? It makes that 6-8 months nothing. It makes that so insignificant, right? So if you kind of think about that, your time horizon for things can change. If you ever go and you look at how long it takes for certain trades to pan out, I've shown you guys that before, haven't I? Of course I have. You know how sometimes I'll tell you, just pretend these are equal for a minute. Okay. And I'll tell you, hey, these equal highs were left open. And then we had 1 day, 2 day, 3 day, 4, 5 day. It took 5 days, you know, for that liquidity to be swept, right? So if you remember that going into a trade, like, hey, you know what? This might take a day. It might take 2 or 3 days. I might be wrong, get stopped out and have to re-enter next week. You know, that I think can help create patience. You could probably, I guess, look at your own life as well and figure, you know, that good things do take time, dude. Right? I look at how many books that I've completed. Not that I've bought, because I've bought way more than I completed, but I look at some of the books that I've read and I go, yeah, I've read all of those and most of those, and I got some over in the corner, like, yeah, I've read, you know, those. And I think back and I'm like, wow, I've been buying books for 5, 6, 7, going on 8 years now. 8 years. I didn't even realize it was that long. And then you just realize, like, wow, it took me that long to finish all of these books. Why am I rushing the next few? So maybe, Lucas, in short, a change in perspective. Maybe that could help, dude. If you, Lucas, if you haven't read, and this is for all of you too, if you haven't read Stillness is the Key, that's a really good one. Not just because people have always said that and because I've always said that, but, you know, the whole idea is we live in a world that's very fast. We live in a world that's very instant gratification. We live in a world where you can tweet anytime, any place, you know, breaking news, you know, celebrities and gossip and WAR and all this, you know, things that are happening in the world. And we are the most connected we've ever been, but somehow also the most disconnected we've ever been. If you catch my drift. We're so connected to the internet and social media. It's the same thing, but we're so connected to what everybody else is doing that we're disconnected from what we should be doing. The more we pay attention to what other people are doing, the less we pay attention to what we should be doing. I didn't clip any of this, by the way. I probably should have. It's okay. But do you get what I'm saying? You know, I truly understand what Seneca was talking about. He's like, I'm trying to write books, I'm trying to write plays, and all I hear is people outside. I hear horses and carriages. I hear men coughing and debating and playing chess, and I hear athletes practicing lifting weights and running and all this crazy shit. He's like, there's so much commotion. It's such a noisy world. And shit, if it was noisy in Rome and all that 2,000 years ago, it's only even amplified today with phones and computers and cars. And the ice cream man, he came by a couple weeks ago. Yeah, right? Dogs barking. Don't even get me started on that. Everyone's got fucking dogs nowadays. You know? And we become just so distracted. That's going to attack your patience as well. You look at these YouTube shorts, 60 seconds max. You look at some of these Instagram reels, 10, 15, 20 seconds. You look at, I hope you don't look at TikTok, but hey, if you do, you get what you catch my drift. Our attention spans are going shorter and shorter and shorter. And that's going to affect your trading too. Because sometimes you're going to take a trade like this, right? Gap below lows in a potentially bullish market. You long that, instantly profitable. And you're going to go, yeah, that's awesome. I wish every trade was like that. And then the next trade you get into, you're probably going to get a decent entry, then it's going to go against you, then you're going to like rip your hair out because you're going, oh my god, it's not going my direction. No, what did I do wrong? Blah blah blah. And then let's say you take a stop out because you can't stomach the idea of taking a loss, or you're watching it on a 1 minute time frame and you can't handle it, and you just, man, screw it, I'm gonna just take the loss. And then you realize in the afternoon the market went your way, but you psyched yourself out because your attention span is ass. All that affects your patience as well. It's all a hindrance to your patience, dude. What the fuck is that? So it's a collection of learning how to pause, learning how to disconnect from the world, learning how to take a break from the internet, social media, maybe friends and family, I don't know. And finding some quiet time, taking a walk, maybe cleaning your room, cleaning your desk, cleaning our desk. Okay. We won't talk about it. Things of that nature, I think would help. Or is at least a starting point. So hopefully you got value. Drop a like if you got some value out of that. We only got 13 likes. We got 50 people. You guys don't read or like videos, man. What's up with that? What is up with that, chat? What is up with that? But I agree, Will. Got to be excited every day. It's a gift, and we're infinitely blessed. I do agree. I did mention that on my most recent story on Instagram. Jordan just had lunch. Very nice. Very nice. I work on patience when I'm driving. Sometimes I'll stay behind a slower oh, Zay drives behind me. Dude, I don't care. I drive slow as shit. I really don't care. Dead ass. Dude, okay, and again, not to, virtue signal or, act like I'm the greatest man ever, because I'm not, but, I was in line at the store yesterday, and I do this as often as I can, just so you know. But if I have a cart, okay, and I'm going to self-checkout, and I got a bunch of shit, and I had a bunch of shit last night, snacks and food, drinks for the week, right? And this guy comes up, he has a gallon of milk and like one other thing. Right? No cart, no nothing. Just a gallon of milk and, I don't know, cookies or something. I don't know what it was. I wasn't like stalking the guy. I just know he had a gallon of milk and something else. And I looked at him and I was like, bro, like, please go in front of me. Right? I'm like, please, And he thought it was just like the greatest thing in the world. He's like, oh, you're so kind. Thank you so much, man. Every time my response, I'm like, I'm not in a hurry. I'm not in a hurry at all. If I was the one that was in a hurry, I had to hold on to this gallon of milk and I got to stand behind someone who's got a bunch of shit in their cart, I'd be like, this kind of sucks, right? You just put yourself in other people's shoes, man. It's so simple. And this kind of stuff goes such a long way. You have no idea. Like, it literally makes somebody's day. I'm like, why would something so small to me is insignificant, but somehow things like that make somebody's day? We live in a world where one tiny thing of kindness can make somebody's day. Think about that for a minute. How screwed up does the world have to be where one tiny thing can shift somebody's entire day? That means we're not being kind enough to each other, dude. That's what that means. That means people are so used to not being treated kindly that a small act of kindness goes miles. That's horrible. That's absolutely horrible. What's good, Big James? Sometimes I just set a deadline too tight for big challenges. Yeah, bro, you can't put a date on success, my friend. I don't care what the MLM industry has told you. I don't care what all these people have told you. Put a date on success. Okay. Is that why only like 1 or 2% of MLM people are successful? Come on. Come on, bro. Let's talk about it. Because it totally works, right? Chat, I'm going to talk shit for the rest of my life. Like, bro, come on. I done seen too much, chat. I've seen too much to know. I think it's good to have goals, but too tight of a stop loss would not be good, but too tight of a date on success is going to pressure you too much and you're going to screw it up. And then you're going to think it's something that you did. It's like, well, you kind of did it to yourself. You put too much pressure on yourself. And you ended up getting exactly the thing you didn't want to get. You ever thought about that? You ever thought about why sometimes you try so hard to do one thing that you end up getting the opposite of what you wanted? Have you ever thought that that was kind of weird? Or maybe you saw someone else. I want to lose weight. I want to lose weight. I want to lose weight. And they do all this crazy shit. And then yet they never lose weight. Right? Because they try too hard. Or they try to take too many shortcuts. They drink the Slim Fast and take the pills and anything but work out, right? And then it doesn't work. Think about it, bro. Don't just learn from your own mistakes, my friends. Learn from other people's mistakes as well. That's why I get you to read, man. People have been through life too. They wrote about it. So, I'm just saying. Often I'm too focused to trade in one side, although there are already signs of a change in trend. Do you have any advice? Well, Crispy J, I don't give trading advice at all of any kind, my friends, or my friend, but I'm not exactly sure what your question is. You're maybe focused on longs too much, and then you see a bearish market, and I'm not exactly sure what's going on here. You can't marry a bias. Marry the game, not the bias. I'm sure there's a video on that somewhere. Oh no, that was, I remember that. That was not here on YouTube. Okay. It basically means a lot of the good trades that I take, not all of them, but a lot of the good ones that I take, especially like today, I go into Mondays typically with no bias. I go in with no bias. Now, for now, I still happen to be short. Like I'm not short now, but I'm saying I do think the market will trade lower because, again, we have liquidity built up now, even more so, and then these lows as well. So that to me makes me want to be short. Now, if we didn't have that, I have no bias. I would just wait for intraday, something on the intraday, in which we sort of have, kind of, for ES at least. We have these two highs, so I don't think that'll stay there. But look at the Nasdaq. This is horrendous. This is terrible. We left some highs, traded lower, and then look at this chop nation, dude. This looks like a cutting board. You ever seen a cutting board that's really old? Like, you ever went to your grandma's house and looked at her cutting board and there was nothing but just knife marks all over the place? That's what this looks like to me. What am I supposed to do with that? Nothing. So then if I don't have a target or a bias, if I can't frame something high, low risk, high reward, then there's no trade, dude. And then the moment you try to force something, your ass is grass. Straight stop loss. So you just got to be open. You don't always have to have a bias. And I agree, Willow. It will hopefully trickle down. I would hope so. Most people online nowadays are impossible to disagree kindly with. Insults will fly. Big lack of character and personal development. Yeah, I agree. I definitely agree. Being kind is the strongest attribute a man can have, in my opinion. Well, yeah, I guess so. I think it depends on the certain circumstance, but sure. Some of you might think I'm kind. I could give you some names of people that think I'm the fucking devil. So, just, again, it depends. Situational, right? I liked what Jordan Peterson had to say. Basically, the capabilities of being violent, but harnessing that. So, I don't know. Crystal clear intent mixed with high emotion will manifest anything. All right, well, hopefully we can manifest some sort of trade idea, because today is trash, in my opinion. This is horrible. I tell you what, though, if you want something to study, this is kind of cool. I'll at least show you something if I can't find like a direction. Check this out. So I want you to really pay attention to everything in here. Pretty much here. So take a look at this area here on this 5-minute time frame. What are some of the things that you can look at, chat? What are some of the things that jump out at you, that stand out to you? What can you tell me? Three sweeps? I wouldn't say three sweeps, but I think you're on the right track, though. So what else? So Leon, I'm assuming you mean like 3 lower lows, basically. Which I don't really have a name for that. And just say 3 lower lows or 3 higher highs. We don't have, doesn't need to be fancy. You just call it for what it is. G says inverse imbalances disrespected plus 3 lows. Inverted imbalances value. Fractal low mitigation. Well, I don't know about a mitigation exactly, but you guys are on the right track 100%. Lows were taken, imbalance was formed, price traded back up through the imbalance, forming a new bullish imbalance. Price retraced back into the inverted imbalance, plus the bullish. Yeah, Nart, so that's perfect. Perfect. I like it, I like it, I like it. We give different versions of ourselves to different people. Alex with more bars. A version for family, a version for friends, a version for adversaries. You know what's interesting is Robert Greene talks about that in Laws of Human Nature. Stop around at the bottom and imbalances, shifting, price delivery to the upside, inverted and standard, imbalance, stab, and it's off. Interesting verbiage there, Cameron. Trade below low, maybe the 3 low pattern. At the lowest low, then an up move that shifts price delivery, leaving an imbalance, bearish imbalance, disrespected, and a bullish imbalance is left. Okay, yeah. So that's kind of my point. Is first thing, this is just my personal opinion. Very first thing I'm looking at is the liquidity here, because there's 2 lows that are very close together. Right? We have like a slightly higher high, but that's just really a liquidity run because there's lows here. So we trade down, right? and then, you know, we make a low, we do trade higher, and then immediately lower, retracement, and then that third lower low here. Right? So 1, 2, 3 lows, that third lower low. And like you guys said, what happened on the way lower? All right, we have this imbalance up here. I'm going to take this larger box off now because I was just trying to show you what I was saying to look at, just for illustration purposes. But right, so we have two imbalances, basically. We have this one right here. We have this one right here. Now, right here, okay, when you notice, oh, man, I thought this was a bearish imbalance to go lower. No, that's also in a discount. That's a discount imbalance, which you probably don't want to short. Probably don't want to short this either. But in looking at it in hindsight, when price traded into this, okay, because think about it, it forms once this down candle closes and the next one opens. Okay, you guys see that? Once that candle closes, it formed. It only takes 3 candles to form that. Less on the smaller time frame, but we're just sticking to a 5-minute. As soon as that candle closes, boom, that's here. Next candle trades into that, and even the opening of the next one trades into it to go lower. So at first, okay, at first, this was short-term bearish. So there was a little bit of respecting there. Okay? You guys with me? Sean, I don't know if you're late. We've been here almost an hour. Wouldn't be the first time somebody was late. So it was respected to a degree. And remember, I told you guys, I prefer the inverted imbalance that was previously respected. It's not always going to be that way, but I like it when they are previously respected. Okay? So that candle completely rips through that. Right? Okay, great. We have another, let's say 1 or 2 candles. Okay, cool. Wait a minute. We're through the bearish imbalance. We have created an imbalance on the way higher. And I didn't even know clocks changed, my friend. Maybe that's why I thought I slept in more than I should have. Maybe that's why. Okay, so take a look at that. It trades through that, back into it here. One more time. It's not a big deal. Okay, it's not a big deal. This one gets disrespected here. Okay. But why wouldn't this one be all that great? Why wouldn't this one be all that spectacular? Think about that. Thought I was going mad? Nah. You have to go join the club with my exes if that's the case. But anyway, my point is, you know, when you're back testing and stuff, ask yourself these kind of questions, dude. The range from this high down to this low, where is your fair value level? It's right here. Your 50% level is where? It's right there. What's good, Zakcha? So look at it. Remember, you already know what to expect. What can you expect at 50% levels? Not every time, but a lot of the times, what do you expect around 50% of ranges? You guys know this. What happens near 50%? Naruto and Zakjo say consolidation. Razzle dazzles. Consolidation is the answer. Okay, so do we want to buy in the middle of consolidation? I mean, if you want to take drawdown and really test your patience, you know, if you want to test your patience, oh yeah, sure, buy at 50%. You want to get better at patience? Oh, just buy it every 50%. Good luck with that. Not trading advice. This inverted imbalance, guys, is in a discount. Okay, the higher one's at a fair value level or 50%. This inversion here is in a discount. Okay, it's in a discount. On top of that, like you guys said, on the way up, you had an imbalance that was created in the opposing direction, meaning you had that one going lower here that was traded through, and you had, when it got traded through to the upside, it created one on the way higher. So it comes back into both of them. Do you see that? It comes back into both of them. What's the low on that? 38,578. Well, what's so important about that? Oh, I don't know, John. It's just fucking random. It's just bullshit. No. 80. That's an 80 level there. 38,580. 80 right there. Oh man, zeros, 20s, 50s, and 80s. Man, that's stupid. Okay. Well, show me a better entry than me then. How about that? How about that? No, I don't want to sound egotistical. I'm just saying, if you anchor your entries around zeros, 20s, 50s, and 80s, or 0, 2, 5, and 8 in the futures market, you're going to get really, really spectacular entries. Don't take my word for it. Backtest. I'm just giving you ideas. I'm just giving you ideas, folks. I wasn't bullish as shit. I was waking up like right around this time. I'll be honest. It's fine. Okay. So there's that. So Nasdaq traded lower here. The S&P traded higher here. So I'm wondering if we get, I'll watch it with you for a little bit. I'm wondering if this just ends up being accumulation to go higher. If this is a stop run, Nasdaq might trade higher as well. Down candle, respected, at least on a 1 minute. So yeah, I'm wondering if we're gonna yoink up here. To me, look, it's just small time frame analysis. I would be a little bit hesitant to trade that live, but again, I will watch this with you. But I wouldn't take this live personally. We're too far into a premium on the day's range for me to be comfortable with. Does that make sense? Like if this is London's high. Oh, it's not. This is London's high up here. Those are kind of equal. And then, so London's high is up here. That would probably get swept if we end up running for those highs. Because that wouldn't make sense if we took those, but then don't take London. That wouldn't make sense to me. Look at the range of today, right? If we have London's high and then our AM session low, look where we're at. We're definitely in a premium. So I get a little bit more hesitant buying this late into not just a move, but in the day's range. Okay. This high to this low, look at that. Here's your fair value level. We're now in a premium. So it's just not always the most comfortable thing in the world. We have a lot of gaps in here too, but whatever. It's not a big deal. So yeah, I'll give this a few minutes, but we'll see if it ends up flying up there. You guys good with that? What about having different models to enter? Is it better to stick with only one to avoid analysis paralysis, or rather not? And you know what? There's a whole tangent I could go on about that. I tell you what. Let's do this. Let's take a 5-minute break. Maybe 10 minutes at the most. Okay, so we'll take between a 5 and 10-minute break. And then we'll come back. And then I'll answer that question and then we'll hop off. You guys good with that? So right now, the clock on my screen at the bottom down here, it says 1:04 p.m. So let's come back at like 1:10 to 1:12. All right, let's take a quick break.
This is gonna be too much for me.
All right. All right. Are we back? Are we back? I said this mix is fire. Oh. Oh, it's YouTube Music. I gotta find the. Here, I'll drop the link at the end. Because I don't think you can have. Let me just share it anyway. See if that works. If it doesn't, maybe it'll take you to the YouTube video. But okay, you guys ready? CPI tomorrow. Was good, Nina? Oh, we're beyond our hour now, but it's cool. Let me clip this. I might try to make this a YouTube video as well. All right. So the question was, what about having different models to enter, says G. It is better, or excuse me, is it better to stick with only one to avoid analysis paralysis, or rather not? So I'll give you what I think, okay? The market moves in different phases, okay? There is a video I did a long time ago, not a long time ago, but there's a video I did a few months ago, and it's called MMXMs or Wyckoff, Why Framework Matters, okay? Because again, the market moves in cycles, okay? So it doesn't really matter if you look at, say, MMXMs or Wyckoff, all right? The point is, let's just say the market runs liquidity and then seeks opposing liquidity, okay? It's probably not the greatest drawing in the world, but it's cool. So there is a model that will allow you to trade up to liquidity. There is a model that allows you to short the liquidity to go lower. There is a model that allows you to wait for liquidity to be swept, then break down, then, short the next available retracement to go lower. There is also a model that allows you to wait for the last leg of distribution or the last leg of accumulation to go higher if this were inverted. So again, you have a model to go up to liquidity. That's one. You could short liquidity. That's two. You could short the next retracement after liquidity run. That's three. You could short a late entry model. That's four. Right? At least four. So there's obviously more than four trading models, but just to give you an example, there's four right off the bat. So I think G, and again, I'm just speaking general terms here. I'm not calling you out or anything. I'm just saying, but think about that. If you have just one model, okay, I'm going to short, let's say the first retracement after a liquidity run. Okay, cool. That's your model. So if you're waiting for that, you're watching the market trade up to liquidity. You're missing those moves. You are, what are you going to do when you see your model, but you come to the chart a little bit later? Let's say there's a 5-minute time frame and this was like 10:30 in the morning your time, but you don't get to the chart till noon. It's 12 p.m. and your model is already played out, so you can't enter the market because it's not your model, right? But then you have, say, a downside target down here that you believe the market's going to go for. So because you missed it for whatever reason, you got a job, you just maybe just had an off day or something. I don't know. Whatever reason you missed an opportunity, you're not going to take a later opportunity and then you're just going to watch the market trade down here. So you're just going to be watching markets and never trading and just watching and watching and watching. Now, mind you, I watch the markets a lot, but I'm looking for trades. I'm looking for actual trades to take, right? So I think having just one particular model is a flawed logic. I think it's a flawed idea in the long term. So if you're a beginner trader or even an intermediate trader and you just want one, maybe two entry models, or, you know, let's just say entry models, right? Then that's fine. One or two in the beginning. But because the markets move in stages and there's a specific like entry model around each of these stages, I think having one or two is very limited. Does that make sense? So let's go back to the Dow Jones and with what I did on Friday, okay? Where I had the lows down here and I shorted like right up here. I took a little bit of drawdown on this, but then it ran straight for the lows and I took profit there. Boom. In, a little bit of drawdown, out, done. That is one aspect, like that's one model right there. If I wanted to be bullish, which I wasn't, but one idea, I could have longed below the lows to go up to that high. I could have entered that and exited there. I wasn't looking for that, but that is one of the models. Buying below old lows. Your stop loss is my entry. That's a model. Shorting bullish retail flag patterns, that is a model. I hardly ever use it. But I used it. This was the first time this year that I faded a bullish retail flag pattern. That was the first time this entire year. It's been it's March 11th. It wasn't until a few days ago this year that I shorted that, because again, I've seen this happen so many times, that fading retail patterns to me is a model by itself. Right? No need for what breakup structure? I don't see any breakup structure here on a 5-minute time frame. Not really. I mean, I guess you could force it maybe, but it was just, hey, observe the masses, do the opposite. Done. That's its own model. That's the kind of things that I'm looking for, right? Dow was the last domino to fall. Go watch that video if you don't understand, again, why I shorted that. So if I was waiting for a retracement that never happened, right? Let's say this imbalance up here. Oh yeah, you know, I want to short that. It's going to clear the highs, rebalance price, you know, I'll short that and then go down to the equal lows. Well, it doesn't do that until Friday, right at the tail end of the session. And the lows have already been swept. So now I don't have a target anymore. So then I wouldn't have taken the trade anyway. And I wouldn't have held over the weekend. Now in hindsight, sure, it does come down for the lows that I pointed out on Friday. But that would have been a hold over the weekend, and this could have easily gapped higher if it wanted to. So that wouldn't have met my criteria anyway for a trade idea. Right? So again, think about, I'll walk you through this one more time and then we're going to hop off here. Okay? I wasn't bullish Friday morning. Okay, this is strictly hindsight. I'm just trying to teach you some things, okay? Say this imbalance up here. Say you thought this gap was going to be filled. Okay. Well, there are entry techniques down here to enter. There, even like this, that morning on Friday, even though there's lows right here, there's imbalances that were respected to go higher. That's a model. If you have lows here and you feel like this gap, if you treat it like an imbalance and you want to short that, you can short this above this high. You can straight up go in there and short that to go lower. Okay, so again, there's a model to long to go higher. That's one. There's a model to short this to go lower. That's two. There's a model that lets you wait for an imbalance after the high's been set. That's three. What I waited for was this retail pattern to happen. So I faded that. That's four. You see what I'm saying? So it depends on what you want to do. If you only look for specifically, let's say, the retracement after the liquidity run, which is very similar to the mitigation model. That's why that model is powerful as fuck. And yes, I'm egotistical about that model because it's literally incredible. Okay, that's why I gave it to you. And we don't really have one here. Not really. But you guys have seen it time and time again where a mitigation will just be utterly disgusting. Okay, this is a very, I don't even want to use that example. It looks horrible. Okay, we'll use, this looks so bad, but we'll use it. Just for an example's sake. This is ideally what it is. Low, high, lower, low. We trade through that, right? So if we have an upside target, it's that up candle right there. Okay? If there is an imbalance or a gap that is within that, doesn't matter if it's inverted or created in the direction you're trying to trade. Does not matter. That's a fucking gem. You better write that down. Doesn't matter. That could be an entry to go long, right? Now, honestly, I don't know what the target would have been. Maybe this high? That's the equities open high. So it probably wouldn't have been equal highs, but there was a cluster of highs right there. So it would be entry, exit on one of those two right there. In, out, done. That's the mitigation model. Why is that so powerful? Is because you're waiting for a liquidity run. And then, well, the next retrace was actually down here. But post shift in price delivery, it ends up being here to go there, right? And that's why I gave it to you. It's the retracement after a run on liquidity. So the stop loss is, well, in this case, it wouldn't have been probably a really solid risk to reward, but I'm just going off today's data. I could obviously find better examples, but this is like the short and sweet of it, okay? But if things were different, say the highs were up here and it gave you a better like 1 to 3, 1 to 4 RR, that's the point. Your stop loss is going to a place where it shouldn't go to again because it's already ran liquidity. So your win rate should be pretty high if you understand the model, right? Stop runs, high probability targets, waiting for those type of setups. But that's just one model. You can play a mitigation off of another mitigation. That can be another model too. You didn't know that, did you? Well, of course you did, because you watched the videos. If you recognize, okay, this was a mitigation it's off of 1 minute, but it's off of a larger segment of price. You could have waited for this high, and then it trades down and into what? You have an even smaller version of a mitigation right here. Low, high, lower, low, sweeps that low, trades higher, doesn't close, but it doesn't have to. I'm not Twitter, not your teenage mentor. Doesn't have to close above that. Trades back down, this up candle, that could be a model to go higher. That entering on this with a stop right there to go higher, that could probably be an easier 1 to 3 or a smaller risk. That's not even 3, maybe 4 points on the S&P from here to here. It's only 3 or 4 points. Easy, tight stop. And I don't know what the TP would be, again, somewhere in here, but I'm just saying low risk, high reward setups. So you have multiple time frames to choose from. You have top down, obviously, working from the higher time frames down to the lower. But just to wrap this up, I think having one model is going to, you're not going to take a lot of trades, bro. I mean, I've seen people go, I haven't traded in 2 weeks. In 2 weeks. If you haven't taken a trade in 2 weeks, that means you're just purposely not taking trades, because there's opportunities every day. I don't think every day is worth trading, but there are definitely opportunities every single day. And if you go 10 trading days without taking a trade, you are, in my opinion, you are doing something very wrong. You are doing something very wrong if you cannot find one trade setup in 10 trading days. You're telling me 10 Londons, 10 New Yorks, or 10 equities markets, 10 a.m. sessions, 10 p.m. sessions, and you couldn't find a trade? That's not something to brag about, dude. That's not something to brag about at all. So anyway, that's that. All right, cool. We got 2 clips out of today's stream. Thank you guys for being here. But anyways, that was I pretty much wanted to get that out there. So there's your answer. Very, very long and thorough answer to, should you only have one trading model? In the beginning, maybe. Sure, focus on that. But as you expand your understanding about price delivery, manipulation, framework, right? Just understanding the multiple stages of price. Okay. The Dow did, or excuse me, the S&P did something similar to the Dow. It ran lows, traded higher, retracement, and then, sends price higher. Once you understand the different mechanisms that, well, not the mechanism that moves price, but you understand the functions of price delivery, mitigation model, imbalance models, premium discount, imbalances, inverted imbalances, things of that nature, you're going to realize that having only one entry model is hindering your performance. It's kind of like saying, look, I want to buy a car, but I only want black inside and black outside. Okay, well, the car lot is 100,000 cars. Okay, well, I want a black inside and a black outside. All right, well, now it's like maybe 5,000 cars. Okay, well, I want a new car. Okay, well, now new cars that are both black on the inside and outside, that's going to be even, okay, well, there's only 300 cars like that. Okay, well, it's got to be a Honda. Okay, well, now there's only 20 cars like that. Well, it's got to be in Houston. Okay, well, now there's only 3 cars like that. Well, it can't be more than an hour away. All right, there are no cars available now. You see what I'm saying? You limit yourself so much, you hinder your performance. But that's just my personal opinion. All right. And I was hoping that we would end up launching above the 26s, before we hopped off of here. I wanted to see that done. It doesn't look like we're necessarily going to get that. At least for now, because we've been here almost an hour and a half. I'm going to hop off here now, but if you do want something to watch, that's what I'd probably watch for this afternoon. Again, I think we'll probably go ahead and continue higher, but I'm not going to trade this live. So with that being said, y'all be good, man. We'll be here same time, same place on Tuesday, tomorrow. at 1 p.m. Eastern. So make sure daylight savings time or whatever. Okay, this is what time it is for me right now. So that means 23 hours from now is when the next stream will be. Totally for free. You don't have to pay to be here. You just have to obviously have a membership to be in the chat, but you don't have to pay to watch these streams. No $1,000 course, no $247 PDF. None of that bullshit. And yeah, Lucas, it's better to just not trade CPI altogether if that's what you want to do. If I trade CPI, it's not going to be till after the release. But I usually don't trade before. All right, so y'all be good, man. I'll see you tomorrow.